Hello there everybody, a very good afternoon to you all and welcome back to another Taurex live, daily live trading session here on Wednesday the 8th of January. I hope everyone is doing well today on this Wednesday as the markets are now fully back underway and we're starting now to see that normal movement and that sort of normal work or normal market flow, which is very exciting. So yeah, looking forward to now. Really, is the time where I start to really knuckle down on some trading opportunities. So happy to share all of that with you guys. And yeah, thank you very much for tuning in. Hello to you, Bobby. It's good to see you, and hello to everyone who may be watching this on catch up, because of course all of our live sessions get posted on the YouTube channel under the live section. You can rewatch these at any time, and also you can get the notification for when I'm live, and also the video which is posted when I'm live on our Discord channel as well. It's good to see a few people joining today, and yes, we're going to be building this up as we go, and we're very close now. Just working on some things in the background. We're going to be having our signals, our premium acuity signals being posted in here, as and when a signal comes up. So I've just been on a call with the team at Acuity, and they're going to be providing the signals in there as part of our partnership with them. So I'm very excited to have that set up, and then after we've got that set up, we'll be sort of distributing the link around a bit more and starting to build this community in 2025. That really remains one of our most important goals. Obviously, there's a few guys who have joined me from previous places that I've been at. Hello to you, Dibble. It's good to see you, and thank you very much for tuning in today. So, if you missed the last if you missed the last couple of streams, we did have a couple of, or three, I think it was, 2025 Outlook streams. One was on Forex, the other was on Commodities, and the other one was on crypto and indices. So you'll see that in either the Discord or on the live channel as well. I recommend, if you're wanting to know what my themes are currently for 2025 and my predictions for some of the markets, then I recommend you go and check that out as well. For now, and for the foreseeable future, we'll go back to our normal sort of daily live trading sessions and really knuckle down on some trading opportunities. And I'm going to be starting my my trading journal for 2025. So any of the trades that I do place sort of on the stream, I'm going to be obviously journaling those trades as I normally would, and we can sort of try and analyze the performance of my trading month on month, which should be, to show transparency that, when I do send out a trade idea, I do place the trade as well. And yeah, I'm just working on some, like a little graph around the spreadsheet that I'm going to be putting together. Okay. So as we come into today, we are on Wednesday. Yesterday we did have Jolt's job openings, which came in, quite strong actually. If I can find it, here we go. Yeah, Jolt's job openings yesterday. That obviously came out after I finished my stream, and it's just starting to feed in already. Obviously, this is really the first look at the employment that we see for 2025. The Jolt's job openings numbers were quite were higher than the forecast, which tells us everything we need to know about how we're thinking about the US dollar. I'm still bullish on the US dollar for the short term. It's just about being a bit patient now, because everyone seems to be piling into dollar buys, so I'm just a little bit hesitant, but we'll look at the technical analysis in just a second. We've also got today sort of the main event coming out in 8 minutes time. We've got the ADP employment change, which again is another look at US employment. Don't use it to determine what you think is going to happen on NFP on Friday. That's a separate report, but it will give us an idea of the ADP employment change. And also we've got initial jobless claims as well, and we've got the Federal Reserve member Waller speaking, and also later on tonight we've got the FOMC meeting minutes. Now I'm a little bit it's always down as a high impact news event, and it is, but it's only really going to tell us what we already know. I can't imagine there's going to be anything different in there. And what we already know is that the Fed are sort of playing a higher for longer strategy, so a slightly less dovish. So we want to get an idea of interest rate cuts this year. Don't use this FOMC minutes as a as a barometer for what's going to happen in the future rates. It's probably it's just the minutes of the previous meeting. I actually think it's more important to focus on the actual data we've got coming out today, jobless claims, Waller's speech as well. How hawkish is he going to be? Is he going to lean slightly more dovish? What you've always got to remember in markets, it's always what's currently been priced in. Okay, and as you can see, during this dip in the dollar, that was when the markets were, and I do say this a lot, but I think it's really important. This was when the markets were expecting loads of interest rate cuts, right? When we're talking about consistent 50 basis point rate cuts. And then what happened is, as the data started coming in stronger, inflation maybe started to not fall as aggressively as people thought, and the Federal Reserve changed their language a bit. We can now see we've gone completely the other way and actually gone further. So what I'm trying to say is, it's always good to know what sort of cycle we're in at the moment. So this is basically the markets pricing in a hawkish Federal Reserve already. So as long as the Federal Reserve remains less dovish or hawkish, whatever you want to call it. I wouldn't call it hawkish because hawkish is raising rates. So obviously if they get to a point where inflation starts to tick higher, right, then yes, we're in for a much bigger move higher in the US dollar. Instead, what I'm sort of looking for over the next few weeks is, we've had this fantastic run up. This is the weekly time frame. It wouldn't surprise me if we, especially if we got some softer data from the employment statistics, that we start to see the dollar maybe sell off somewhat. Because remember, the markets never move, and I try and tell people this all the time, the markets never move in straight lines. Okay, so it's unlikely that we're just going to see a continuation and a blast up higher. There will be a pullback at some point, and it's about being patient enough to wait for the pullback and then know that we are sort of mispriced, and then we can look to try and buy up some dollars. So for the Forex market at the moment, I'm not massively interested in buying the dollar exactly where it is. If I do manage to get on in a scalping opportunity, like for example on the pound versus the US dollar, you can see again when this happened, when we had this massive move lower, as you can, and I'm just talking about general market structure, you can see, it didn't just continue, even though we were still bullish on the US dollar, we didn't just see the pound versus the US dollar sink because the markets trend, and we see that trending now. If you didn't manage to catch on to this, then again, what we need to do is now we've blasted into a new low on the pound versus the US dollar. We need to wait for the next pullback and then try and get in, okay? And then try and ride that trend lower. I'll be doing a few more streams on this. I know you guys who are currently in the watching the stream live will know that I like to trade. If I'm trying to catch a trending market, I like to trade the trend rider strategy, which is basically a strategy that uses the EMA 12 and the EMA 36, and it gives me an idea at least for how strong this trend is. And you can see we've only really just begun the year, and you can see we've just begun our bearish crossover here on the pound versus the US dollar. So this is a good early sign, but I'm not jumping straight into opportunities. I'm going to remain patient and wait for that dollar pullback first. I'm interested to see as well how the stock market is reacting to this sort of inflationary data when it comes to the likes of like stronger jobs data, inflationary, a more hawkish Federal Reserve. And really the markets they're not really doing a great deal, as you can see. They're still, the S&P 500 still is yet to really kick off any real meaningful move, and we're still sort of in this range-bound territory. But I'm going to be watching to see if we do manage to get some sort of breakout here from this move that we had lower during the Christmas period. This is on the 4-hour time frame. So I think what we might see is prices squeeze a bit more, and I'm on the hunt really for a move lower and a breakdown below this trend line, or a move higher like that. Now, what you have to remember with the stock market is they like stability. So at the moment, there's a little bit of uncertainty. They're not quite sure whether the jobs data, like NFP or inflation, is going to be massively higher, and the Fed need to be more hawkish. I can't imagine that's going to be treated too well. Or is the jobs data sort of somewhere around the forecast, slightly weaker, inflation's falling slightly, and there's room to be a bit more dovish? Then we can see this one. So this for me would be like a dovish breakout, but not too dovish. I'm going to put here stability, actually. Because actually there is a situation that people forget sometimes, is being overly dovish isn't necessarily a good thing, because if you think why the Federal Reserve would be dovish, it would be because the jobs data or the economic data is falling off a cliff. Right? And then they'll be forced to stimulate the economy. But if the data remains stable, then that's good. But if we get any sort of anomalies, I don't even know if I spelled that right, but any I don't want to use the word anomalies. I'm trying to think of a word. I'm trying to think of a way of saying that if the data comes either really hawkish or really dovish, then that's that. So it's inflation or weak. Inflation or recession play. Okay. And that you can replicate that across any of the markets, to be fair. Let me just I wanted to post this in the room. Any markets you guys are looking at that you want me to take a look at? S&P scenarios as per live. From today's live stream. Okay. So just bear that sort of thing in mind when we're looking at the data that's coming out. And obviously I'll update you as and when. We've had 16 minutes, so we are, I imagine we've just seen the data. Yeah, sure thing. You love the pound versus the Japanese yen, don't you, Bobby? ADP employment change, 122k, previous 146, forecast 140. A little bit of a move low in the dollar. Nothing really, though, is it? It's not really had too much of an impact just yet. It might be worth listening out to the Waller speech later on as well. Pound versus Japanese yen. Well, the pound's taken an absolute battering, isn't it? And actually something really significant happened, Bobby, on the pound versus the Japanese yen, which has just made me start to doubt the bullish nature of it, should we say. And that is that you can see that we come and we've tried to break above these highs, right? We've just failed on a few occasions, and we actually had a successful liquidity sweep. We break that down onto the 4-hour time frame. This was the sort of move that I was looking for, right? So you can see that what I was looking for, which is basically what we got, was a move down into this 61.8% of this move. And then we saw a move up towards the top of this Fibonacci. And then we've retraced. So this market is a market currently which is doing two things. One is we're pausing for a move lower. But what you have to remember is, before we move lower, we must always think about how we can grab liquidity. And we have got the most obvious equal highs. Right? And for me, equal highs always represent liquidity. So my play for this market, Bobby, is for a move up towards these equal highs, a liquidity sweep, so we successfully grab the liquidity, then we move lower. Because what people will be doing now is selling here. You know, the market's struggling to create any new highs. We're actually creating potentially our first break of structure here, and everyone will be jumping into sells. And I bet what happens, well, this is the way that I trade, is that we see a move up towards these equal highs, the liquidity is taken, we flush out all of the current sellers, and then we get the big move lower. Okay? Especially when you consider this sort of channel has now been broken as well. So the signs are there for some bearish price action. But again, I want to see a grab of these equal highs first. And then with the NASDAQ, similar sort of thing really to the S&P 500, because again, it's not really been a great deal of movement as such, but you can see it's probably not the best pattern to draw actually. Just marking these key lows and key highs. I think as long as we stay within this range, we're still obviously going to be ranging. But what I'd look for, Bobby, is if we do get that inflation or recession play, break down below, move up to an order block or a supply zone, whatever you want to call it, and then a move lower into a fair value gap. But if this is just a holding pattern and the data comes in, stable and the soft landing narrative is still there, then I do think what we're doing here is potentially pausing for our next move higher. So can't quite see an area that I'm looking to buy from just yet. Let me just have a look on the lower time frames. Potentially here. This could be an area. Because you can see we did get a move higher here. We did break above all of these structures, right? So maybe we get this. So that's an hour play, an hourly time frame play. Because you can see there's an order block there, right? So yeah, that could be a decent play. Obviously, we'd have quite a tight stop loss there. I'm not going to place this. I'm still sort of just feeling out the markets at the moment. But there is a good risk reward here. Even if we just played the top of that range, you've got a 6.67 to 1 risk reward trade there. So I'm going to leave that one there, Bobby, and I'm going to come back to that one. Okay. Okay, and yeah, that's about it later. So I'm not expecting too much from the FOMC meeting minutes, but do expect a kick up in volatility during that time. So that's out at 7 o'clock UK time. We've also got the Federal Reserve, a Federal Reserve member Waller speaking at 1:30. So make sure if you're interested, tune into that one. A lot of this week is about US jobs data, so that seems to be the themes at the moment. Yeah, drop me a message if you need anything in the Discord channel, and I will see you all tomorrow. And do trade well and trade safe. Should have my journal ready for tomorrow, so I'll make sure I take a look at that. Okay, take care. Thank you. Bye.